Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Let me tell you what I look for in particular. What I'm looking for right now is we've got a situation where the Pt6, for example, statistically generally doesn't get more than 5 points away from the 62. Doesn't get more than 5 points away from that moving average. What I look for in a case like this is I look for an option with an expiration, because it can take this long. I look for an option with an expiration no sooner than 60 days, but between 60 and 120 days, that is trading at a strike price of about, because we're dealing with the number 5 as the average, with a strike price that is about 3 points away from where I am right now. So it's out of the money far enough that it gives me some room to buy something relatively inexpensive, but it's not so far out of the money that it's really not going to have a delta that tracks. It's not going to track the current price very well at all otherwise. So I've got to look at all of those things.
Your forecast is trading 71.65.
Yep.
When it gets back to Main Street, would that be at 68, 67?
That's exactly it. That's exactly it. It's like 67.50 or 60, right in that area. But I just rounded it up to 68. That's exactly right.
That's the strike price you'd be considering.
That's exactly right.
And then you obviously 60 days, maybe more. Depending.
Right.
That's really, you know what, Rob? That's great that you're able to quantify that, because a lot of guests really can't. I mean, I know that they get different ways, but they don't. Sometimes they really can't, come up with the plain vanilla on the ways to do it. So that's
great. That's what I really did. So now think of it for a moment, folks. I mean, this is what I love about options. And remember, there's no guarantee. I mean, nobody at ISE and nobody at OptionsUniversity and nobody at my website is telling you that there's a sure thing. But if you like this trend right now, let's say you think that I'm just full of crap, that you just think I'm ridiculous, and that there's no way in the world that the British economy is going to come out of the hole, and the Bank of England is going to lower interest rates again, and they're one of the most honest, financial governments in the world about how bad things get, and you think it's going to go even worse. What I want to ask you for a moment is, do you really want to be exposed to your point of view without any protection whatsoever? And if you do agree that having some sort of protection is necessary, then why not use a method of protecting yourself in the trade that is exchange traded, that's cash settled, and buys you time? And because none of us can predict the future. I could perfectly well be absolutely wrong, and that the spot price isn't going to $1.45 or $1.50 even, and that the options price isn't going to get down to 66, 64, 63. Maybe I'm completely wrong about that, and maybe you want to do the opposite. You want to buy spot, or you want to buy futures. But why not have some sort of exchange-traded, cash-settled, time-related investment that protects you from sort of being exposed to the full weight of what goes wrong? And that's the reason I'm kind of here today, is specifically for the purpose of sort of sharing the methodology by which I manage the process of being wrong as much as I do maximizing the process or the ability to be right. I want to go down to some of these other slides, and I know I might be jumping around a bit. I have this set of slides, and I'm going to actually. Sarah asks, which FX broker can you use to trade the options? You can use, Steve, you can, I don't want to name any names if there's somebody in particular that you like to mention, but I don't think there probably is. You'd love everybody to.
Exactly, Rob. Basically, this product can be traded through any of the equity and options brokers. So I don't really have any favorites, but some of the people that have been on with us, Interactive Brokers, Options Express, E-Trade, Trade King, those are some of the folks that have been with us. But that being said, there are probably 20 different brokers, or maybe even more, that you can trade this right through. And the same exact symbol that Rob gave you, BPX, be used through all those brokers.
All those brokers, and I don't get paid by or accept money from any of these people. In fact, I'm not beholden to anybody except for myself. I mean, I'm telling you what I'm doing. I'm not telling you what I'm doing so that a firm or somebody gives me more money or whatever. I mean, I do this for myself. Somebody asked, so I'm looking at a 68 strike price, 60 days. Yeah, I would look at something 60 days, 90 days, 120 days. You want to buy yourself time. You don't want to get stuck. Once again, we're not trying to make a killing here or invest in one trade that changes our life forever. No one trade should ever sort of make or break us completely. But collectively, over time, compounded gains is the greatest financial invention of all time.
Let's see a question about open interest. Open interest had been gaining up until September. We've seen it level off, but look at the bid-ask spreads every day. That's really what you want to do. Take a look at that, and go to your broker's website. You can go to LiveVol. If you don't have a broker, you can go to that LiveVol website and check out the bid-ask spreads. But I think that, and if you're worried about bid-ask spreads, another way to trade this is to use a spreading strategy. You can, go to OptionsEducation.org. I've done a presentation at the ISE where I get into spreading. You buy one, you sell another. It's another way to trade it.
Oh yeah, see that's a whole nother ball of wax. There's ways to do calendar type spreads on some of what we're talking about right now. For those of you that are familiar with options, and really the educational, the free education available about the ways that options are traded are innumerable. In particular, the book Options as a Strategic Investment. It's the Bible of options trading. And like I said, I'm not an expert in options trading. I'm a lover of the currency markets first and foremost. That's what I do. There's a couple ways you can ask additional questions. Can you explain drawdown? I can explain it. I'm intimately familiar with it, as a matter of fact. A drawdown is simply, let's say that I'm holding an open trade in the futures market or the stock market or the currencies market in a spot price, not an option necessarily. And I'm holding that trade open, and it's going against me. Just think technology stocks, 1999 to 2000. You held it, and you held it, and you held it, and you held it. Your account was drawing down in the same way that a gambler sits at the table and just continues to watch his money deplete as he engages in a strategy. A drawdown is a collective set of trades that have lost money in a row, or it's one trade or one set of trades that are open that are collectively in the negative, and that's what people refer to as a drawdown. That's an excellent basic question. Steve, if people have questions, they can get some of the spreadsheets work that I've done at robbooker.com/books/ISE_EUI.XLSX. You have to have Microsoft 2007 Excel. If you don't, then just get a converter. I am here today on behalf of the International Securities Exchange, and OUForexTrader.com, my friends there, asked me to fill in for a speaker, and I appreciate them. And you can get additional information, I think, by signing up there. Yeah, Steve, I'm open for questions or anything else you want to talk about.
Rob, what about, can all the attendees, can they go to your website, or, do you post, do you blog? Because I know sometimes people are busy and, they always want to know what's thinking now. Is anything available?
Yeah, you just type in my name into Google, Rob Booker, R-O-B, and my last name is Booker, B-O-O-K-E-R. You'll get directed to my website, and I do a limited amount of speaking or teaching or anything on a fee basis anymore. I am working on another book for John Wiley and Sons, and I'm happy to hear from people. I'd love to hear from you, and to the extent that things that I offer on my website that are free are available to you, I encourage you to feel free, take advantage of them. And I'd love to hear, I'd love to be in touch. So yeah, if you type in my name, or you just type in robbooker.com, which you can see the link up there, and contact me or see me through the webpage. I do offer some things, but it's been on a much more limited basis than it ever has been before.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.